maybe what we'll do is still use for now. Get out of this one. Are you using this stuff out in Moodle a lot? Oh, log me out. I waited too long, I guess. Oh, no it didn't. There it goes. And we'll get into chapter, what are we on? 4? So what's really new in this chapter? We got into discontinued operations, right? Okay. By the way, are discontinued operations still at the bottom? Yeah. Question?
When Warner's talking about the CPA changing, I know they talked about this. What does she mean by that? Are they changing how they're structured? Or
Yeah, periodically they make some changes. Are you familiar with the changes are yet?
I've read a little bit about it. They didn't give a lot of specifics, but it's going from more like they're trying to decrease multiple choice, add more questions. It's trying to get stricter on making sure you understand what it is.
Less rote memorization, more essays. That's what I understood too. And what do they call simulations? They call them. They're going more for those simulations, aren't they? And what they're going to do is they're going to have a data set, and you're going to go do research in the data set. So it'll still be a constrained data set, still letting you go on the internet. So it's controlled good. But you'll go out and you'll search for things. So on a tax issue or on a gap issue, you'll search and then you'll write memos about it. They'll have you do things like that. Try to model more what you would really do at work, okay? And then, you know, so, but there'll still be multiple choice and there'll still be normal essays. It's more like a evolution as they change the CPA exam, but the format's changing here. I don't think they're changing the structure in terms of the sections. They're not changing that in here. But it's still going to be auditing, business, economics, and whatever BEC stands for, and commerce or some whatever. And then they're still going to have the financial, right? And then accounting and reporting or the other stuff. So they'll still be, all the classes that we're taking will still be represented across. So that's not going to change. Yeah, it's not going to change. So the exam has been, the pass rate on the exam has gone up rather substantially, but that's a lot due to they require 150 hours in almost every state now. So people have more education when they're taking the exam. So they're making it tougher to get to the point of taking it, but then the pass rate has been going up, and maybe it's been going up more than they wanted to, right? So to balance that, you know, make sure people are really qualified when they come in. So, yeah, it's still a pretty prestigious certification to have. It's worth a couple of minutes of your career, probably. Just in, you know, but you figured out over a lot of years, right? You figured out over 40 years, you know, divided, you know. But it's a pretty good jump in salary, basically. And it opens different opportunities for the types of jobs that you can get. If you have CPA up your name, you're like you can interview for CFO positions. You don't, you probably won't. It's kind of what happens, right? So, anyway, because it's kind of, the way I would view it, when I went to school, unfortunately, I had this guy that had taken 7 or 8 times to pass it. He was a good teacher. He just had a mental block or something against the thing. And I had him, and it sounded like this was something you went to work, and you worked for years and years so that you could pass the CPA exam. It was just sort of a career aspiration. Luckily, that was at University of Puget Sound, where I did my undergraduate degree. And then I didn't know where I was going, you know, I was a kid. And I went to Pacific Lutheran for one class, which was just across town in Tacoma, Washington. Much better school. And so I went for accounting. So I go over there and I had this guy named Dwight Phillip. He says, "Oh, no, you don't understand. This is the entry level, right? This is the entrance exam for the profession. It's not something you aspire to. It's something you do as an entrance." And you notice what Lauren had to say about that, right? When is she taking the CPA exam? Now, right? Now, while she's going to finish up her master's, right? So as soon as you can. Those of you that double major, do 150 hours through a double major, can't do it until you graduate. You have to have a degree first. You don't have to have your master's first. Just a degree. So that's one of the advantages of doing the MBA too with some folks. Right? Are you doing the MBA or are you doing the double? You don't know yet.
It's more like I don't really have to do it. I'm doing honors.
Oh, okay, so you're gonna wait, probably graduate for 150 hours probably, yeah, but that's just fine too, you can start doing it then. A lot of students will tell me, oh, well, I'm gonna wait until after busy season to start doing the exam. I think that's a bad strategy. I think you take it as soon as you can and take it every single time you can. Don't wait. Waiting is a bad strategy. Why? Because you forget things. You only remember what you're working on. You don't remember all the stuff you're not using. What if you go into auditing, like Lauren's going to do, instead of tax, and then there are questions about tax, and you haven't had tax for a year? Oh man, Or vice versa, you go into tax and you find out the tax questions. What's going to happen to you on auditing part of the exam? Right? It's a general exam. It's for everything, right? So, and by the way, it's a monster. But you know what? The exam you just took is probably harder. Okay? And the exam you're going to take in 212 is even worse. And the exam you're going to take in 313 is even worse. We love it when our students say, I went through this CPA exam, and you guys were wrong. It's not that hard. Geez, all they did was, it wasn't as hard as your exams. They gave us all kinds of time, right? Well, yeah, but it's comprehensive, remember, right? You gotta know this stuff. No more brain dumps. We talked about that, right? You don't forget anything you learn, okay? So you get good at taking exams too, doing this, I suppose. Okay, anyway, so, oh geez, then I opened the wrong thing and talked forever. We may use this though. Were there some questions that you wanted to work? We could just do it that way. Or we could go where we were in the PowerPoint, that'd be fine too, and look at some examples that way. I don't care.
Can we start problems?
Sure. You got a particular one you want to do? Pull up the answer here, because of course I can't work them, but you can come up and work them, right? Alright, so we were talking about discontinued operations, the net of tax benefit and all that stuff. By the way, now there's no extraordinary items. These are gonna be before tax, right? In the non-operating, you put unusual or infrequent or now both up into the non-operating, that's before the tax line, right? So those all be before tax, okay? So it makes it a little bit simpler, okay? E46.
On page 193.
Yeah, let's do that one. Okay, that's a multiple step. Now with extraordinary items, we'll have to modify, won't we? Okay, so what do we do with these? Which of these are extraordinary items? Oh, loss from earthquake damage, 150,000. So we'll talk about what would it change. So when you look at a problem like this, what do you have to do? It's kind of interesting. They want you to do a multiple step income statement. They don't say anything about a balance sheet. But what would you say about a whole bunch of these accounts? They're what?
Assets.
Yeah, they're assets. There's assets there. There's liabilities there. There's even equity accounts there. What are you gonna do with those on an income statement? Nothing, right? You're not gonna do anything with those on the income statement. They say assume the tax rate is 34%. Do they have any discontinued operations? Oh, on this one it doesn't. Is there one that has discontinued operations and extraordinary items? So we can talk about what the differences between the two of them. All that's gonna happen here is everything's gonna go up in the regular income statement, right?
E4-2.
E4-2. Okay, let's try that one instead if that's okay with you. And this time they didn't give us all the balance sheet accounts. What would you have to do if there were balance sheet accounts? Ignore them, of course. Leave them out. Okay, so what these guys want you to do in this one, they want you to get income from operations, net income, right? And then what goes to controlling shareholders, what's comprehensive income, and then what retainer is at the end. Okay, so what do you want to do with this thing? Presented below as information for deal company, I guess, right? Where are you going to put everything? Tell me what goes in income from operations. Sales, cost of goods sold. The difference between those two is going to be gross profit. Selling and administrative expenses. There are a whole bunch of different expenses relating to operations. Okay, all that's in operations. Where does gain on sale of plant assets go? That's going to be the other, which we really call what? It might be called other on the statement itself, but what is it? Non-operating, right? What does that mean? That's the stuff that is what, guys? Peripheral to the main operations, right? Okay, peripheral. The main operations is sales and cost of goods sold and operating expenses. The peripheral stuff is what? Gain or loss, those sorts of things, and other revenues and expenses, right, guys? Okay, how about unrealized gain on available for sale investments? Uh-oh, where does that go? Other comprehensive income. So that's another comprehensive income item, right, guys? So a unrealized gain or loss. What does realized mean versus unrealized? What's unrealized mean? You did not get an exchange of what? What do you think unrealized means? What does realized mean?
You receive the
Realized means you received the cash or paid out the cash. You realized the gain or loss. The cash changed hands. What do you think unrealized is? You didn't, right? Yeah, you didn't. So this is an unrealized gain or loss, okay? So if it's realized, we actually sold them, right? Sold the assets, I mean, that gain or loss would go where? In non-operating in the income statement as a gain or loss, absolutely, right? Because we're not in business to buy and sell stocks, right? This is peripheral to our business. Got the idea? Okay? So the unrealized is going to go where, though? On available for sale securities, it's going to go in other comprehensive income, isn't it? Okay, in the equity statement. Everybody good? Okay, we talked about that stuff before. Okay, we're talking about it, knowing under different things, that business. Okay, all right. And then what does realized mean? We got the money. What does recognize mean? When it goes in the books. Okay, when we talk about recognizing a gain, what do we mean? Where did we put it if we recognize it? Is something put in other comprehensive income recognized? No, recognize the gain would be put it on the income statement. So what would we do with trading securities? Remember that from principles? Trading securities are those that we're going to only hold for a few weeks, right? So the gain and loss, we're going to adjust the market value on the asset, right? Trading securities, just like we will for available for sale. Except what are we going to do with the gain or loss? The unrealized gain or loss. Where does it go? On the income statement. Where would it go? Down in non-operating. Just like a realized gain or loss would. Just for those real short-term ones. What's the theory of that? We're going to sell it real soon in the next few days, right? So probably the price isn't going to change very much before we sell it. So it's a real gain or loss, right? So we go ahead and recognize it. We think it's going to really happen. What about on the available for sale? We think we're going to keep it longer and the price is probably going to adjust anyway. So it's not really locked in. So we go ahead and adjust the market value of the asset, but right? The available for sale security, either up if it went up in value or down if it went down in value. But then what do we do with the gain or loss? Put it in other comprehensive income. We're parking it in there, aren't we, really? Got the idea? Do you close other comprehensive income accounts? No, they're equity accounts. Do you close gain or loss accounts? They go on the income statement. Income statement? No, you do. Just like revenues and expenses. A gain is similar to a revenue, only there's no expenses associated with it. A loss is similar to an expense, only there's no revenue. What would you close is all your revenues, all your expenses, all your expenses, all your revenues, all your expenses, and your gains and losses. Anything that shows in the income statement you close.
Okay.
And then you close dividends too, even though that's in retained earnings, but it's a temporary retained earnings account. So we just added gains and losses to the same thing.
Right, okay.
Got it? Good. Okay, good. It's a nice insight, right? You know what? If you get a couple insights a day, you're really going places. Really. If you really get it solid, oh, I got that. Right? I got it. It makes sense. So do that. Don't let things just go by. That was really a nice example. Don't just let it go by and say, wait a minute, okay? Or look at me puzzled, right? And I'll look back at your puzzle problem. But anyway. All right. How about interest expense? Some companies would show that where? Up under operating expenses. Other companies might show it where? In the other non-operating section. Yeah. Okay? Yeah, just your judgment. I like it up under operating.
So is that what where should we put on text?
Wherever you want. Either one of those. Okay? And then if I mark it wrong, you say, wait a minute, Keith. Yeah, you go either way. Right? Loss on discontinued operations. Now this one, by the way, that should be 2 lines, not just one. What should the 2 be? We did it last time. Loss on discontinued operations. Or gain on discontinued. Loss, gain or loss on disposal, you bet, one or the other, right? And that should go there. And from operating, right? Okay? So it's from what? From the beginning of the year up through the date when you decided to dispose of it, the measurement date. That's gonna be the gain or loss on operating it. From the point you decided to get rid of it, what happens? You start wrapping it up, you're selling off inventory, you're laying people off, paying severance, all that kind of stuff, right? So there's a lot of cost being incurred. That cost gets added to the gain or loss on disposal. Make sense? So it's kind of weird, but that and it makes sense though, doesn't it? That as soon as I make the decision, I don't have normal operations anymore, do I? So all those costs after that are considered part of the disposal. So I show two lines. So they really should have two, right? And where are we going to show that stuff? The discontinued operation still goes where? After income from continuing operations, right? Everybody agree with that? So I'm going to show my revenues, less my cost of goods sold is my gross profit, less my operating expenses is my operating income, right? Less my non-operating other, right? Other revenues and expenses, gains and losses, might call it that. But all that non-operating section, right, is going to be there, okay? And then I'm going to get net income from continuing operations. We talked about last time the difference between net income from operations and net income from continuing operations, didn't we? Right? Okay? Like Bernie Sanders today. Okay, anyway, my wife says he's a mean old man who points at people. And then I take my arm, we'll be driving down the road, and I'll put my arm out the window, which I do all the time to point at things for her and hit her in the face, right? You know, so, anyway, yeah, it's just like you, no wonder I don't like him, so. Why is she prejudiced against poor Bernie? Because he's an old white man. This is not fair, I think, yeah, so anyway, yeah. She wants a woman president really bad. I kind of wanted to be president too, but probably not because she's a woman, just that she's well qualified. Yeah. Terrible. She just happens to be a woman, right? I'll force myself, yeah. I think she's a pretty good president. You know what I really mind about that though? Is that she was a president's wife. There's nobody else in the country except somebody who is either related to a former president or was married to one that could be president. Really? What kind of a country do we have? 300 million people, and nobody that we don't know who they are is qualified to be president, apparently. Just some celebrity president's wife, or, you know, or, you know, TV star. I guess that's what he is. Anyway, Trump. Yeah. All right, anyway, let me get up on that stuff. Who cares? Anyway, so the loss on discontinued operations, where are you going to put those losses? Where are you going to put the losses on discontinued operations? Where are you going to put them? Where do they go? After income from continuing operations, right? Okay, got it? And they're not, because that's after tax, right? Because we get net income from continuing operations before tax, and we take away tax, we get net income from continuing operations then. If we put anything below that, which is going to be just discontinued operations, what's going to happen? We have to show net of the tax benefit if it's a loss, or net of the tax expense if it's a gain. That's it, right? And then we're going to total up and get net income. By the way, when you do earnings per share on this stuff, where do you start? With the net income or net loss from continuing operations, and every line after that, you're going to show earnings per share for. So it's easy to remember. It's the line. What's the line? Tax expense, and then net income after tax, right? Got the idea? Right? So everything after that. So it's pretty easy to remember that too. Okay, anyway. And then what about this allocation of the non-controlling interest? After we know the income, this is the portion of the income that does not belong to the majority shareholders. It belongs to minority shareholders. So we should look at how that's played. And dividends declared and paid. Do dividends go, my principal students did this a lot. Do the dividends go on the income statement? No. Now let's think about this one more time. If I put $100 in a savings account, let's say savings account's actually paid interest, so it pays 5%, right? Let's say you earn 5% on it, okay? So I put $100 in the savings account, it earns 5%. How much do I have in the savings account at the end of the year? 105. How much would you say I earned? 5. What did you take the 5 out? You only have 100 in it, right? How much would you say you earned? 5. And you took it out. This is the same deal. You earn your net income or you have your net loss, right? Then you take a dividend out. The dividend is what, you guys? A reduction of the retained earnings, but not an expense of running the business, right? So don't put dividends on the income statement, please. Do not call it dividend expense. I go nuts, right? Is there such a thing as dividend income? Yeah, I invested in another company and they pay me dividends. That's dividend income, right? Is there such a thing as dividend expense? Of course not. It's not an expense to pay your owners a dividend. Got it, guys? Okay, so keep that one straight. That's a real common mistake. All right, so let's look at 4.2 then and see what they did. I bet we find it fairly soon. These are brief exercises. Those are questions. Well, maybe we're going to find it soon. There's a lot of stuff in these chapters, huh? Nope, that's the brief ones. Okay, exercises. Number 2. Okay. How come I can see it and you can't? It's bizarre, isn't it? We're not going to use this, I guess. Let's go it up. For sure. All right. How you do? All right. Okay. All right. There we go. So, like we said, you put the company name, right? Income statement for the period ended, right, guys? For the year ended. Sales revenue, less cost of goods sold is gross profit. Selling administrative expenses. Okay. And then what? What should that say? I don't like the way they did it. This should be called what? That should be operating income. This 120 should be operating income. I think I blew that. So you think so? That should be operating income. And then what's this? This is a non-operating item, and they put in interest expense down with the non-operating, didn't they? So what do they say in A down here? They don't say anything in A. Oh, that's answer A, I guess. What's income from operations? Is that what A was?
It asks to compute the following: income from operations A, meaning that it
Okay, yeah. All right. Man, I don't know. They don't want the interest expense included in that? I have 120 plus 50 less 6. That's income from continuing operations. That's okay. Income from operations should be 120. Then add the 30. Then take away the 6. It's okay to put the 6 down here, right? Like we were talking about. You can put the 6 under other revenues and gains, non-operating. This section down here is non-operating. This section up here is operating, right? The interest expense could be either up here as with the selling administrative expenses or down here. But that gain in the sale of plant assets is non-operating in there. I don't know why they did that. I don't get it. How about the 132 net income? Are we okay with that one though? Here's the loss in discontinued operations, and you should have in parentheses net of tax what? Benefit. Do they tell us the tax bracket here? They didn't in this problem. Let's assume it was 40%. Can you tell me what would have been there in parentheses if it was 40%? That would mean that what? 12,000 is 60%, right? So what must the loss have been? Total. You back the tax out of that. If 12,000 is the after-tax loss, right? What was the tax benefit? That would be 60%, right? Take 12 and divide it by 0.6, and what do you get? 20? Right? Okay, so what would the tax have been? 8? 8 tax benefit. And what you do is you put in parentheses next to the loss of discontinued operations, right? Less tax benefit, $8,000. Okay, they should have done that too. Okay, they just wanted to show you though what happens with this. So there's the net income for everybody. This is what belongs to the non-controlling shareholders. Is the 40,000 down here? You guys agree with that? And then if you take that away from 132, that's obviously what's available to the controlling shareholders. Make sense? Okay. Then that's their net income is the 132 here. Okay. And then what do we have? What goes on other comprehensive income? Now you do a comprehensive income statement too, and there are 3 ways you can do this. You can either, and I'm going to let you guys decide which of these seems the most logical to you. There are 3 different options. We can show, or not most logical, most commonly done. Which is most commonly done? Okay, what we can do is we can do an income statement We can do an income statement. Wow. It is fast. Somebody took a little marker pen that we had in here. I don't see it over there, it's buried. You could do a regular income statement. Keep your hand up flat. Okay? You could do a regular income statement. Okay? Or, they're sitting alongside there somewhere. Okay? You could do that. Or you can do a combined. Okay, show you that, right? Which would be the income statement and with it on the statement, other comprehensive income. Or you can do an equity statement where you take this income statement and then put it down, put it in equity, and you'd have columns that would give you other comprehensive income. So I'd have like my common stock, additional paid-in capital on common stock, preferred stock, additional paid-in capital on that. I'd have my retained earnings, and then I'd do an other comprehensive income column, and I'd do a total. And what we do then is we put all those other comprehensive income items down in here. So here it's on one full income statement. Here it's in a separate section on the equity statement. Any of these three are fine. And here what we have is the income statement, but then we also need a comprehensive income statement. So we do another statement, so two of them. What do you think companies tend to do? Would they do two statements? Would they do a combined one where it's all one statement showing the regular income, like they did here, the regular income working your way down to comprehensive income, that's what that is. Or do you think they just put it in an equity statement? Think about these other comprehensive items. What are they? Things we did not want to put in the income statement, right? So how many people probably are doing a combined statement where they show it anyway? Almost nobody. Because these are things they didn't want to put in the income statement in the first place. How many people are doing a whole other statement, showing their full income statement and then attached to that another one, showing, starting with the income and then working their way down? Nobody's doing that either. They don't want to attract attention to it. What do? They bury the equity section. It's a column in the equity section. Most people can't understand it anyway. There's a lot of examples like this in accounting. We want to tell people what they need to know, but we don't want them to have really notice it. Right? You know, there's a tendency to just, well, people who know what they're doing will find it anyway, it'll be all right. And you know what? It is disclosed. It's there. Read it. The equity statements, right? It didn't used to be important to read the equity statement. Now it is, because that's where all this bad news is at. Maybe bad news. Could be losses, could be gains. In this case, it's a gain, so you want them to see that, right? But what if it's a huge pension loss or something, right? Buried in other comprehensive income in the equity statement. You have a question? Comment?
Well, what do you think?
What do I think would be better disclosure? I like to combine. I think I like to combine. But I think a lot of those things should have been in the income statement anyway. So let people use their own judgment. Look at it and just show it to them, and they can still see what your net income is and see what your combined with the other comprehensive income is, right? You know, here, see, we still have the net income here, right? It's 132. We know what it is, and then they added it, right? So I think that's conceptually better, but I understand why people do it this way, right? It keeps their income statement cleaner though. They don't have all that other comprehensive stuff in there, and maybe they think that's confusing. It kind of is. Most people don't know what it is. Before we started this class, do you guys know what other comprehensive income is? And you're just starting to now, huh? When you're in 313, you have it figured out pretty much a couple classes from now, because we're going to work with it a fair amount. Okay? So, yeah. All right. So what else do you want to do? I guess that was all that one, wasn't it? You know the difference between periodic and perpetual inventory? Yeah, we did that before. How about a change in accounting system? Like on Acct 414?
Take a look at that one. So these guys began operations in 2012, so that's their first year. For simplicity reasons, adopted weighted average pricing for their inventory in 2014 in accordance with other companies in the industry. They decided to go to FIFO. Pre-tax income data is reported below, so here's weighted average, and FIFO would be different. What's different? Pre-tax income data. Their net income would be different years. Why? Because they're with different methods, I'm sorry, it would be different each year. What's different? What accounts are different? Inventory and cost of goods sold. That's it, right? Think about this. Everything you start with, made this up all by myself. Kidding. That's a joke. My beginning plus my purchases is what's available. Would you agree with that? Subtract my ending must be what I don't have, which of course is my cost of goods sold. You guys agree with that? If you make this number smaller, what did you do to this one? Assuming that one stays, assuming this stays the same and this stays the same. If you make that one less, what happens to this one? It goes up. I mean, it's kind of duh, right? The reverse is true too, right? If we increase the ending, what happens to cost of goods sold? If everything else stayed the same, it goes down. And we're going to start this company with 0 at the beginning, and the purchases are the same no matter what. Got it? So if you change from one method to the other, when you change inventory, you're changing cost of goods sold through. Within a given year, if you change inventory, you're changing cost of goods sold, and vice versa is true. Everybody got it? So keep those relationships. It really helps. Right? It's simple, but it helps. So why would FIFO have more income than weighted average? Weighted average is sort of a combination of LIFO and FIFO, right? So you're halfway in between. So what would you think? 25,000 what? If income's more, what must have happened? Inventory is first in, first out. Inventory is up, which makes cost of goods sold. Inventory is up, which makes cost of goods sold down, which makes income higher. Everybody got it? Will there be a tax impact of that too? Of course there will. Whatever their tax rate is times that change in income. Everybody agree with that? And then each year that's true. By the way, with this company, do they have increasing inventory prices or reducing inventory prices? FIFO, first in, first out, gives me more income than average, which is moving towards LIFO, right? Average, LIFO. What must be happening? The inventory is higher under LIFO than it is under FIFO, isn't it? Right? Which means there's inflation, right? So, can there be deflation? Yeah, sure. I mean, each individual inventory items are types of inventories. So sure. So we got the difference on each one of them. What is their net income in 2014, assuming a 35% tax rate on all years? Compute the cumulative effects of the change in accounting principle from weighted average to FIFO, and then show comparative statements for them. Okay, so what do you think? For 2014, what's going to happen here? What would you do for net income, assuming a 35% tax rate? We know what income before taxes. It says pre-tax is $450. What do? Take 45% away from that for your taxes, and the other 55% is what? Net income. Sure. Okay, so that's what they will have done, of course. And we are going to be on which exercise number was it?
14.
5. It's like a lottery wheel or something. 16, 17, 18, 14. 15. All right. Okay. So there it is. 450 less than 157.5, which is 430. It's 35%. I apologize. 35%, and the difference is the 65%, right? That's all you need. Okay. Now, what would be the cumulative effect for the prior years? We'll figure out what the incomes were, right? In the old method, what they would have been under the new method, and then the difference is obviously your increase in this case in prior year's earnings. By the way, where does that increase go? We're increasing what? We're increasing inventory by that amount, right? For each of them, we're increasing inventory for those prior years, aren't we? Because they stated in a lower amount, now we want it to be higher. So we're increasing inventory and decreasing cost of goods sold, which increases income, right? You'll have more income, retained earnings, because that's where you close the cost of goods sold to, right? Absolutely, you got it, okay? So it's gonna go to retained earnings, isn't it? Okay? So here's the weighted average, here's the FIFO, here's the difference for the first 2 years, because the current year hits the current year, right? Right? Change in accounting principle is gonna hit the current year, right? And then we're gonna state them retroactively, right? Everybody got it? Okay? So I'm gonna go back 25 and 40 is 65. What's the tax impact of that? 35% of it. So how much is gonna be my net effect in retained earnings? 42,250, because what happens? My inventory is gonna go up, right? And then what else is gonna happen? My cost of goods sold is going down, which is making my net income higher, but that makes my tax expense higher. But what would you have done with the tax expense? Just like the cost of goods sold. Closer to retained earnings, wouldn't you? But it also makes something else higher. My tax, what? My income's higher, my tax is higher, tax expense, which makes debit tax expense credit what, you guys? Tax payable. So my tax payable is going to be higher, right, guys? Okay, all right. And we're using LIFO, or moving average, I suppose, for tax purposes, so it might be deferred income tax, right? Okay, depends on whether we file amended returns or not. Okay, so fine. So then they do each one of the years. What are we going to have? The new incomes that they gave us times 35% tax for each one of the years, right? We already calculated the first one, 292.5. And then each of the other years, that's the way it's going to be. They didn't do the journal entry for it. Let's do the journal entry. How much did they increase their inventory by? From 370, well, it's going to be increased by 40 in 2014. So I'm going to have to make that entry. And I don't know if you can do it with this information. You're going to debit inventory by 40 to bring it up to where you want it to be. And part of it is going to go to cost of goods sold in the current year, and the rest is going to go to prior years' retained earnings. And then we're going to adjust the tax burden to change all of their taxes, right? So whatever the tax would have been the prior year netted with that. So we'll do another problem to get that. But anyway, but it gives a little more information. So let's try another one. How about, find one where we make a prior period adjustment. Yeah, let's take a look at problem 4.7. Wade Company has 150,000 shares of common stock outstanding. In 2014, the company reports income from continuing operations for income tax of $1,210,000. Additional transactions not considered in $1,210,000 are as follows. Okay, so they sold to the. So we start with $1,210,000. Yeah, this was a fun one. I've given a lot of test questions similar to this. Problem 4.7 on page 199. Okay, so they sold equipment. So what they've got is $1,210,000 is their income before tax now. And then when we read on, the tax rate is 38%. So I guess we're going to have 38% tax on that, right? And then the 62% is going to be their income after tax. You guys agree with that? Okay, and then let's see. So first they sold some equipment that's not recorded yet. Where are you going to put that sale of equipment? Yeah, that's going to be under other non-operating. So if they've got income before tax of $1,012,10, what's that? The gain or loss on that going to do for us?
It's gonna adjust that 1,210,000, isn't it?
If it's a loss, it'll make it less, if it's a gain, it's gonna make it more, and that'll be before tax money. So I start with that number, and then I adjust by whatever that is. And then I'll take the tax impact after that's in there, okay?
How about though the next one, discontinued operations, a loss of 190. The loss from operations was 90, the loss from disposal was 100, to make 190. Where are you gonna put both of those?
Down under discontinued operations, which is gonna follow what? Follow net income. And right, remember right before net income continuing operations, right? Okay, so right before that, I'm gonna have my income tax, right before the net income continuing operations, right? And right before that, I'll have income, right, before taxes. And this is gonna have to be what? And it's coming after taxes, after the line. It's gonna have to be net of income taxes.
Okay, and these are both losses, are they? So we're gonna have income tax what?
Benefit in both cases. How much will the benefit be?
Let's see, I got 90,000, right?
Times 58% benefit. Because I got $1,210,000 of income. I'm still profitable even after those losses of 190,000, right guys? Does this make sense? Okay.
So, yeah, we're gonna put both of those on separate lines and we'll add them up. An internal audit discovered that amortization of intangible assets was underestimated by 35,000 in the prior period. If we're gonna charge against retained earnings, why are we gonna charge that against retained earnings?
Because we already closed it. We made a mistake in a prior year, we closed the mistake to retained earnings.
But what would that have done to our taxes? Does that say pre-tax or after tax? They say net of tax. Tell me what the loss must have been before then.
Before tax. They already took it out for us. I bet you that's 62% of the loss, right? They're in a 38% tax bracket. Wouldn't have to be exactly that way. You calculate the tax return with it in there and without it in there, and that'd be the real tax impact in real life. But if we assume the tax rate is 38%, what would you say? 35,000 is 62%. What did you get when you took 35,000 divided by 0.62? What must the loss have been approximately? That makes, you guys stand with me? 35,000 divided by 0.62?
Where are you getting that percent?
Oh, 38% tax bracket.
Where'd you get that?
Where's that at?
Down at the bottom, the very last line, assume the total effective tax rate of 38.
Ah, yeah. It's funny how you look at stuff after a while. That's kind of what expertise is with you guys. You just look at a sheet of paper, or you look at a financial statement, oh, look at that number, look at that number, look at that number. What, where, right? Just keep doing it, keep doing it, keep doing it, right? So, yeah, I knew I had to have a tax rate, so I just looked for a percentage. That way, first was the problem there. So, yeah. Okay, although the gain is gonna be an effective tax rate of 40% up above, so we don't know exactly what that tax rate is. They said their total effective tax rate is 38, so could have been some other tax rate. But what did that come up to, anyway? About 56,000? Yeah, so they had a 56,000 loss and they took the tax out for you, fine, thank you guys. So always be watching for if it's net of tax or pre-tax, that make sense?
Okay, then the company have a gain of 125,000 in condemnation of much of its property. The gain is taxed at the total tax rate of 40%. And assume it meets the requirements of extraordinary item. Well, what would you say now? There's no such thing, so where does that go? Up under other also, which is before income taxes. So that would be pre-tax up above, and then it'd be taxed. Is this a loss?
That's gonna give us tax benefit of 38%, right?
Okay. So then we should prepare the schedule based on this. Well, let's take a look at it. Problem 4.6.
Everyone's problems. It's like a lottery wheel we run. That'd be something easy way to do this, but maybe not. Old textbooks. Okay, there they are. Are we in 4.7? Go around. All right, there. Wade, there it is. Wade Corporation. And so it's an income statement and they say partial, okay, so that makes sense. For the year ended December 31st, 2014. So if they ask, if a problem on my exams, quizzes, or on the CPA exam, right? ask for an income statement, even if it's partial, and make it look like one, okay? So they know that you know what one looks like. I get a little credit for that. Wade Corporation income statement, they put partial on it because it is, or the year ended, of course. Okay, so they're starting with income from continuing operations before tax. Where did they get the 1,000,002? That's not the number they had there. What was the number they had? 1,210,000. Come on, go up there. Okay, so it started with that, but then what they do, they took out the loss on the sale of equipment. What would be the journal entry for the sale of equipment? Let's do that. What would be that journal entry for the sale of equipment, you guys? How much cash did they get?
40,000.
40,000 cash? Okay, how much was the equipment recorded at? Yeah.
80.
Am I right? Your cash comes in, equipment goes out. How much accumulated depreciation was there on the equipment? 30? Okay. So we're gonna get rid of that. What was the book value of the equipment? 80 less 30 is 50. They sold it for 40. What happened to them? Loss of 10. You guys can do this, can't you? Okay? Let yourself think. Loss on sale, 10? Is that right? Is that where they got that loss of 10? Absolutely. So if you know the journal entry, you can figure the gain or loss. Real simple. Okay? Just calculate. I don't care if you do the journal entry or not. Okay? That made it 1,000,002. We don't want it to be 1,000,002, do we? What do we want to put in there? We're going to change these numbers. What do we want to put in there, you guys? That was crazy, didn't it? Maybe that's the last one. What else do we want to put in there? What else do we want to pick up, you guys? What about the thing they felt was an extraordinary item for 125,000? Where are we going to put that 125? Yeah, we're going to put this 125 up in operating, aren't we? So what will we do? This 1,000,002 is not 1,000,002 anymore, is it? What's the number? That's another lot, or that's a gain in it. Gain on condemnation. Set it up. Gain on condemning the property. We're not going to have 1,000,002. What are we going to have instead, everybody? Kind of a flaw. How much was it? 125 gain. I'm just going to add 125 to that. So it's 1,425,000. You guys agree with me? See what I'm doing? Because that's no longer an extraordinary item, is it? Yes, sir.
So like if you have you say you don't have extraordinary items anymore, so we put the 125 up in non-operating, and the tax rate, the effective tax rate is different than net income tax. Like how do we?
Oh, well, then it would change your rate from 38% to 38 point something or 39 point something.
Because we're not going to net it tax at the non.
No,
So that
I wouldn't give you a problem with this. I'll give you one that is, good problems. But yeah, if you did have a separate tax rate on that, it would just change your overall average tax rate. So in real life, you have different tax rates on different types of gains and losses. So you just take your total amount of tax and put it in there. Okay, so, all right, that's a good question. So it's kind of a pain every time something gets changed, isn't it? So what we would have done is we would have changed this number to what? This one becomes 425? 125?
Isn't it 1.2 plus 125
Was it?
2.5?
We want the gross amount. It's 125, isn't it? I don't know why I got it. It's 225. 125. So 1325. Okay. And then let's just disregard the difference in tax rates. Okay. So what would we have? Our income tax would be what? How would you calculate your income tax here? What's this number? It's 38%, right? Isn't that what it was? So take 38% times 1325, and what do you get? Or what you could do, I guess, is take 38% times 1,000,002 and then 40% times the 125 and get it that way too, right?
So really, our tax is gonna be 456 plus the 50 if you use the 40% down here. Everybody got the idea? What was it if you did 38? It's a little bit different.
503,000.
So we lost 3, but that's because of the difference between the 40, right, and the 38. So let's go ahead and use that. Let's use 456 plus 50 if we knew that was the tax. Wouldn't we have tax here of 506, right, coming out of there? And then that would give us what? Income after continuing operations instead of this 744 would be 1325 less 506. Everybody agree? How much is that? All this stuff just goes away. I'm not going to do that stuff. What's 1325 less 506? 819. Okay. So that's our new income from continuing operations. Then would we still have this loss from discontinued operations? Sure. Would we still have the 34.2 tax benefit? Right? They say tax reduction, that's just fine. Okay, so the net between the two, the after tax, is 55.8, right? And that's lost from operations, true? And then we do the loss on the disposal. See how they did that? It was 100, and then there's the 38% tax on that one. So here's the net. Could they have shown both of these parenthetically instead of showing all those lines? Sure, that'd be fine. Okay. So 55.8 plus 62 is a net loss of 117.8, all after tax, isn't it? So if we took 119,000 here, less 117.8, what would be the net income here? It's going to be a miraculous number. 819 less 117.8. Guess what you get? 701,200. So all we've done is we moved this 125 up above and the tax on it up above. See that? So we get the same number, of course. Okay. What would you do on your earnings per share, gang? Think about that a second. What would you do on the earnings per share then? I don't know why that has to go away every time you do anything to it. Yes, it does. What are we going to do on our earnings per share? Where do you start your earnings per share? My stuff just went away. Where does it start? With the net income, which is which line?
After continuing operations.
Yeah, income from continuing operations. So you're going to start here, right? So that's the first one. And then what? Do the one for discontinued operations. If you want, you do one for this one and one for this one. Do both of them if you felt like it. Okay, that'd be fine. And then what would you do about, there would be no extraordinary item, right? See, that you wouldn't have that line anymore, and it should just be the net income, right? So it'd be the 701,200 that we had when we made all those changes up there, which somehow disappeared. But anyway, okay? Strange. Isn't it?
Like on a test,
Oh, there it is.
if we get like the net income or something wrong, do we miss everything else? Like
Nah, whatever. If you divide the right number of shares into the wrong numbers, I'll probably give you credit. Yeah, no issue. Earnings per share. Okay. Earnings per share is pretty simple, isn't it? What do you have to remember? Start with income from continuing operations. So what if you just have net income? By the way, you don't call it income from continuing operations if you just have net income, right? What if there are no discontinued operations down below? Just call it income from, or I'm sorry, just call it net income. Net income before tax, tax expense, and net income. And then the only earnings per share you're going to show is on the net income. Got it? So the only time you show more is when you have the discontinued operations stuff. Make sense? Okay. So pretty simple, I think. This stuff's not too bad. Didn't this problem also ask for retained earnings statement? It's interesting. It takes it all away. No, it didn't, did it? They say the error related to the intangible asset was correctly charged to retained earnings. So let's see what that journal entry would have been if that's what we do. Let's think about that. There was an error that changed the income, come on.
No, that's the loss of the sale of equipment, that's not the intangible asset.
It's the number three.
Oh, the intangible asset was understated by 35,000 net of tax. Oh, okay, what would the journal entry have been for that?
Does that hit the income statement, by the way, if it was all prior years? No, right? What should they have done in the prior year? The way to do, prior, period adjustments is like this. Approach I like to use. Figure out what they did, okay? Figure out what they did. Figure out what they did. Jeez. This is doing this. Delayed or something. Figure out what they did. Figure out what it should be. Come up with an adjusted journal entry. So what did they do with this amortization? They failed to record it? Well, they understated. Okay. So they understated. One. Understated by how much? 35,000. Amortization. Okay, they didn't record it. What should they have done? Debit what? Amortization expense? For 35,000, everybody agree with that? And credit what? What were they amortizing? Does it tell us? Okay, so a patent or a copyright or something. So let's say it was patents. So we're just directly amortizing the patent. Fine. Okay. That's what they should have done. But at the end of the year, what would have happened? You would have closed that amortization expense to what? Retained earnings. So retained earnings would have been debited by that, right? Okay. So we failed to debit retained earnings and we should have. So what would you do now to fix it? This is what they should have done. What's my adjusting journal entry to fix this? Which will be my prior period adjustment. What's it going to be? Credit patents. Simple. The 35,000. And debit what, you guys? Where'd that be close to? Retained earnings. You guys with me? But there's always another piece. What's the other piece? Is this amortization expense deductible in the tax return? If the answer is yes, what are we going to have to do? Do the tax impact of it. What would it have been last year? What would the tax impact of this entry have been last year? Debit tax expense and credit what? Tax payable. Everybody agree with that? It's true, isn't it? That's what your entry would have been. Okay? How much? 38%, right? What's 38% of 35,000? 13,300? Everybody agree I'd have more tax expense by 13,300? Or, wait a minute, did I go the right direction? Whoops, backwards. What did I do wrong? I'm increasing the amortization expense, what would happen to my income? It'd go down, so I would get a tax benefit, wouldn't I? Come on, Keith. Did you guys notice that? It's backwards? I hope. That's what we do. So what should this be? And this be? Kind of backwards, didn't it? Should it be, guys? Tax payable goes down, good. And tax expense goes down, doesn't it? Sure. Because you have less income, right? Okay. So how did that work when we do this adjusting entry the next year?
Soon I go back and I refile my income tax for the prior year, I'm gonna have a tax refund, aren't I? Tax payable or tax asset, it might just offset my current year tax, reduce it, right? So 13,300 here. What changes? Well, the net effect really on income is 35, less the tax savings of 13,300, right? So what's the net effect on retained earnings? Gotta put the two of them together at this point. Keep on get it to work. There we go. What's the number gotta be? Obviously the 35 less the 13,300, right? How much is that?
21,700.
See it? So everything ends up running through retained earnings, certainly the amortization expense would, and the tax expense. And then you just adjust the balance sheet accounts to where you want them to be, and you're there. So any prior period adjustment is gonna work that way, right? If it increases income, guess what? You have more tax expense. If it reduces income, guess what? You have less tax expense. Okay? Got it? What do you want to know, guys? Nothing. Leave me alone. Keep working. This isn't too bad a chapter, especially without a story or Adams. They weren't that hard. So what do we have next? Balance sheet. Tons of disclosures in the balance sheet. Like I said last time, you only need able to put together an income statement, right? Pretty detailed, and a balance sheet, pretty detailed. Pretty fine. Right? So if I gave you a list of accounts all in alphabetical order, right? Imagine that. And there's 50 accounts. Did you figure out what goes on a balance sheet, what goes in an income statement, where it goes? What's current asset, what's current liability, what's not current, what the disclosure should look like. What goes on the balance sheet, what goes in the income statement, where it goes in the income statement, right? If I threw in some discontinued operations, big deal. If I asked for earnings per share, big deal, right? Make the statements look good, okay? So imagine on a 3-hour exam what I can do on a table, right? Big long list of accounts. Know where they go, know what those sources are. See you guys.
So question is, how do you get something?
Okay, this is your total. I had 2 courses written this one. If I did it right, this is what happened with 50. And then you divide that by 150.
Which is
It's
this
this.
number.
And you are 1% or 7% plus.
So I'm
This is really good. Really good. Like 80% of the
there's
Yeah.
still some things
You're
like,
in great shape.
there's still some things that are annoying me, but maybe I can actually do like the review session. Cause I think I learned to do certain things a little bit differently. These ones I ended up doing fine. Cause I do it like totally different than how I do the examples, and I had to go back and look at my old notes,
That's okay.
which is fine, I guess. But for some reason, these like
How do you
cash,
do different?
not different, like I get the same things, but for these ones, like the missing journal entries on that quiz,
Mm-hmm.
I completely panicked. Like that one quiz was like really bad.
Yeah.
And
No big deal. Problem.
yeah. But that one like made me panic. But then I went back and remembered like, oh, if I just look at the beginning balance and then
You were
subtract my
probably
beginning.
telling me, I bet you were telling me what the source entry was instead
Yes,
of the adjustment.
yeah. And so I
You
like
have to
did
look
it
at what,
completely
yeah, what
wrong.
it asked for.
Because I didn't
But that might
like
just be
get
interpreting
that.
the problem wrong
Yeah.
versus not knowing what you're doing.
So and then the stupid cash to accrual.
Still got it.
Yeah.
Let's do it again. We'll in one of the
Because it's like it makes me feel like an
when
idiot.
this,
It's not that hard.
when this clicks, it's just gonna be, oh, that's it. You know, and that'll be all
Yeah,
right.
because I was just
You get it that
sort
moment,
of panicked, and then I was like, well, I felt pretty fine about the rest of it.
That's really good. Yeah, if you'd had, those weren't that hard.
If
You
I would have
that
had that, then I would have had like.
Yeah. So you're right there anyway.
Yeah.
Isn't that cool?
I don't know.
It's kind of blinds you when you're sitting out there, doesn't it?
I think it's worse up here, like, it's just so big, hard to look at it all.
Well, we can make it like that.
Yeah.
We want to, but then back there, it's kind of hard to see probably.
Right.
And then that would give us a place to do this. Especially maybe forward. Maybe I should switch back and forth between the two. I don't know why the print's so big there. So, Herb, so what the hell happened?
I don't know, I feel really lost. I don't know what we
Wait,
did.
didn't you do your one-on-one your equivalent for Christmas?
My last principal's class was my first semester of my sophomore year. So,
You're,
no good teaching. So there's a
so
period.
you got a year almost between, is that right?
Yeah.
Mhm. That's not a great strategy. So,
Well, there's
now
a-
you're gonna go back to Georgetown and take what? You're gonna take the fall course of this? You're just visiting, right, for the summer?
Yeah, I was just gonna transfer it over.
Yeah, well, passive, I think, you gotta bear down. Okay, let's say that if you had come here and you were gonna be an accounting major, and you were transferring from somewhere else, then you're kind of in a situation with the bridge to the first, the principal's class. Get it really big. Yeah, that's why I probably don't have the first course solid. First, it was solid in the first place. Second, um, didn't take it that way. So then when you did know what I say, they would come in and out. And we did really, really fast. And my accounting curriculum here is where I get all these big board projects. So what I would recommend to you if you weren't gonna go to school somewhere else is to make the job actually 101 for the rest of the summer. Because we're doing that. If you do that, you can drop this class. You know, if this is the most extreme, drop this class and do my 101 class. And you stuff really well. And then you go to Georgetown and nail the semester. That's not bad strategy,
Yes.
right?
They talk
Get a lot less
close
people.
together.
So you want to work over there.
Excuse you? Excuse you.
Pete is like starting to be nice all the time.
Why do you think you get to sit next to me?
I'd recommend practice some strategy. And then you come back and see what I did with that, or just no big deal. The other thing you want to do is just subtly compare it up. Just see where it goes. The date. That's not. You can just keep going, and then you can see where you're at, and just don't let the day go by, right? But then, if you
We're
really
almost
drop
halfway
it,
done.
you pay for tuition and, you know, we got, you know, right? And you get sure by doing that, is if you started where we're at in 101 right now, chapter 6, and we just drop the flag, but at least you get that other. That makes sense. And then, are you in that?
Oh, I was leaning that way.
So I need you up. I love that.
Town's a great place to, besides I think if you really want to become a city, you're not gonna get much compromise.
Yeah, I was talking about this.
That is all of us.
Can you believe we won 2 championships?
I'm
so
so happy.
exciting.
I know, we've had it for like a year and a half.
Vegas, graduates.
Well, I know when it is.
What are your placements?
Did you really?
That's it.
Dave, how are you? Obligation. Not what I should be Yeah, no kidding.
You just stopped at 211 too, right?
I probably
That's okay. Somebody's charging you online.
I got
They can notice what it is. Hey, guys. So. Anyway. All right. Kind of have to remember where you're at with all this stuff. Okay, where did my recording go? That I'm still recording. There it is.